The British pound is the currency that everyone has been focusing on today and will continue to focus on for the coming week. Today, sterling from high to low had its single biggest one-day decline since the beginning of the year. Now, it did not end the day on its lows, but it certainly engaged in quite a bit of a roller coaster ride that gives us a sense of the uncertainty as well as the anxiety that UK politics is causing for investors. Now, before we get to that, though, today we did have a Bank of England monetary policy announcement. And with the BOE rate decision, typically this is one of the more important event risks on the UK calendar and should have been the leading driver of the currency. But what ended up happening was that the Bank of England, they left interest rates unchanged, which was widely expected. They did express some concerns about Brexit, trade, as well as what's happening in Italy and global growth. But their throwaway line on how rates will still need to gradually increase at a limited pace was enough to drive sterling higher. But the British pound ended up shrugging off the Bank of England's comment and tumbling in the hours to follow because of Brexit. Brexit has been hanging over the pound for the past few months, for a few years to be exact, and that hasn't changed as we get closer and closer to the March 29th deadline. Now, we all know that that deadline is no longer the date that we're focusing on. Prime Minister May has already requested for an extension of Article 50. And the question now is how long of an extension will be granted? And that's really what's causing all of this volatility in the British pound. The whole idea with that is that if we get a long extension, then that would be better for the currency, for the economy, because it would give the UK government and the EU, if they so desire, a longer period of time to reach a new agreement or at least to build consensus around the current agreement. A shorter delay really accomplishes nothing because if the UK Prime Minister can't get Parliament to support her deal in 2 years, there's no way that she's going to do it in 1 or 2 months' time. So the headlines that we've had today have been all related to how long that deadline, that extension will be. And that's caused quite a bit of volatility in the currency. I mean, to start off, she asked for only an extension to June 30th, which the market considered a short extension. And then as the day progressed, we got, talk that the EU may be considering a longer 9-month extension. Later on after that, they said maybe they would only look for an extension to May, which isn't very, very long from now, or they would go for an open-ended extension. So the bottom line here is no one knows. And the EU hasn't made a decision. They've even said perhaps, the extension would be predicated on the UK government basically approving or voting in favor of the current withdrawal bill, which won't happen. So the fact that we're a week away from the targeted March 29th date, and we're not any closer, actually much further away for an agreement, really has the market on edge. So sterling, which has had previously responded positively to Bank of England rate decision, has fallen. I think there's significant downside risk in the week ahead because the EU will be forced into an emergency summit where they will make a decision on how long that extension will be and finally, at least for the time being, seal the fate for the pound.